Have you studied a ton of analysis, but your equity curve still looks like a heart monitor? It's not the drink, it's the dirty cup. The market is a pileup of people and emotions. If your investing mindset isn't clear, even a high win rate method turns bitter when you pour it in. Let's clean the cup first, then decide what to pour. We don't sell ticker tips, we don't flaunt P&L screenshots, and we don't promise returns. You don't have to believe how much I've made. Just look at how I manage risk. The prettiest track record won't suddenly have your name on it just because you copy the playbook. So let's focus on what matters: risk control, reading sentiment, and a steady, repeatable strategy. First, props to you for taking a bold first step. It tells me you want a better version of yourself. Whether you're brand new to markets, someone who's bought course after course and still feels lost, or a seasoned trader with a steady playbook, this course starts from the core of the market, shifts in sentiment, and the strength behind trends both up and down. For experienced folks, it sharpens your logic and helps you refine what already works. For beginners, you'll see how markets really move, learn risk before trades, and participate in a way that earns the returns you deserve. Markets change fast, and most of the time, they're pretty boring. Only by learning continuously and polishing your process can you stay steady in rough seas and pursue returns that are calm, not flashy. I'm Harvey, the trader who tells you to wash the cup first. I'll turn messy analysis into a clear, checkable list. Only when the boxes are ticked do we enter, so you stop fearing volatility and stick to moves within your risk range. Before I found my footing, I spent money on courses and even followed signals, and still fell into holes. That didn't mean those methods were useless, it meant my cup was dirty. The more time, energy, and money I poured into tweaking tactics, the deeper I sank. That's when it clicked. If you don't clean the cup, everything you pour tastes like mud. So I tore apart what the gurus were teaching. Most offered methods without the logic. I stitched together what I'd learned and went back to first principles, the common root of all strategies: market sentiment. When you miss how sentiment is changing, you get eaten alive by price, even if you can name every pattern in the book. Okay, let me show you an interesting phenomenon in the price action. Have you noticed that when you open a chart to look at today's price action, the price goes up and down, and your mood goes with it? You are not sure how to enter, how to exit. That is usually because you are missing a few reference points. Today I will keep it simple. I will show you a few useful lines. These lines can be used in many ways, but we will start with the basics. How to handle special cases and how to judge them. We will cover that inside the course. For now, just look at it visually and trust your intuition. You will likely feel it is effective and interesting. I am adding 3 lines: an upper yellow line, a lower yellow line, and a red line in between. When an uptrend forms, price tends to ride along the upper yellow line. At the same time, it usually does not break below the lower yellow line. Sometimes the red line even acts as support during shallow pullbacks. When price is about to move lower, it often tags the lower yellow line first, then builds another pattern before continuing. Here is a clear downswing. During the move down, price rarely reaches the upper yellow line. Instead, the red line frequently caps the bounces, so the path keeps pointing lower. Only when price breaks back above the upper yellow line does momentum tend to flip upward again. It is interesting, right? Of course there are exceptions, but we will not chase edge cases today. Let us only look at what these 2 yellow lines and the red line can do at the most basic level. From a visual standpoint, you can simply judge whether the fit looks precise to you. During an advance, the lower yellow line is touched rarely, and at times the red line provides support as price grinds higher. This view is on the 1-hour chart. Now let us switch to another time frame, the 4-hour. Notice this decline. During the down move, price hugs the lower yellow line, and the red line keeps acting as a ceiling. Only when price pushes back above the upper yellow line and the red line together do we often see the start of another small uptrend. Let us try another example. In an up move, price rides the upper yellow line while the lower yellow line remains untouched. In a downtrend, price tracks the lower yellow line while rallies stall near the red line. Handling exceptions is part of the course because the rules are clear when you know what to look for. Under normal conditions, you will notice that the lower yellow line is rarely violated in an uptrend. If it is pierced briefly, price often snaps back quickly. That is typical of a pullback, not a full reversal. This is a simple pattern, but it is a very interesting one to observe. The cup theory. A solid trading plan isn't gossip, and it can't be copy-pasted from someone else's results. Even the slickest strategy needs a clean, see-through cup to hold it. Otherwise, you can't taste what's really inside. When markets shift hard, every crosshair drifts a little. What matters is adjusting on time, or stepping aside without drama. Good strategies have reasons. But many courses teach the how and skip the why. They hand you a fishing rod, but never teach why fish bite. So when the current changes, you're still casting in the same spot. For me, the cup theory covers more than sentiment. It forces us to review discipline, risk control, and tolerance. These decide how long you can survive in the market. People love to talk about win rates and big gains, but few discuss the stress and risk you paid to get them. That's why the cup matters. It's the container for any strategy, and the mindset that lets you see the ingredients clearly. So, wash the cup first. If you don't know how, let me show you. Chapter 1. Mindset, risk settings, investor psychology, and discipline. Build a healthy investment worldview and take every trade's risk seriously. Control it, and your profits can scale over time. Each analysis is a test of whether the market aligns with your thesis. When you are right, keep your composure and wait for the exit signal. When you are wrong, totally normal. Cut the loss strictly, reflect, and wait for the next entry signal. Chapter 2. Reading charts and tools, market state, key candle, and sentiment. Learn the emotion behind each price candle, identify the current market regime, and combine a few selected indicators with price action. The goal is a stable, practical entry, exit process you can repeat. Chapter 3. EMA in practice, sheet music analogy, recognizing normal versus distortion and how to use both. We cover extended EMA applications, the interesting interactions between price and EMA, and how to pair them with candles to read trend direction. You will see common patterns where the EMA acts as resistance or support. Chapter 4. MFI in practice, follow the money, price, volume relationships, and imbalance detection. We get practical with MFI and the logic that price, volume data can reveal. Let the volume paid with real money become the most reliable ally in your analysis. Chapter 5. Force and drivers, who is pushing the market, how strong, and how to go with it. Price action often mixes bulls and bears. A small edge from either side can change the path. We will show how to locate the driver, which way it is pushing, how hard, and where it is safer to go with the flow. Chapter 6. Replay and real-world cases, full breakdowns of wins and losses. We move from class to markets, step-by-step replays and backtests to find both the successes and the failures within our framework. We deconstruct the logic to strengthen your conviction on entry versus no entry and to sidestep common pitfalls. Bonus, first 5 to 10 minutes, trend versus range, multi-time frame handoff. Inside the case study modules, we add handy mini techniques outside the core strategy and pair them with live demonstrations, an extra layer of protection for your approach and a way to reduce drawdowns. By the end, you'll test ideas with controlled risk, read price action to judge strength, run a personal checklist that keeps emotion out of the process, and have a 10-minute open-the-chart entry logic you can repeat. You can port the framework across markets with product-specific tweaks. After everything we have discussed, presenting no data at all can feel a bit abstract. First, I should say I am not an all-powerful trader, and I am certainly not an engineer. For the sake of demonstration, I compressed and simplified this framework to run programmatic backtests using only the single strategy from Chapter 2 across multiple time frames in various U.S. equities. I must emphasize again, this is far from the full integrity of my approach, and the figures are for reference only. The point is not to prove how much this method can earn, but to illustrate that its risk control can materially reduce drawdown risk so that returns can be pursued more steadily. This course is for educational purposes only and does not constitute individualized investment advice. All trading involves risk. Past performance does not guarantee future results. My approach flips between long and short as needed, so every session you can hunt for suitable entries. It works across equities, futures, commodities, options, and crypto, any market where humans trade, as long as you adapt to each instrument's behavior. You'll also learn to choose time frames that fit your pace, schedule, and risk, a way of investing that gives you more freedom and a calmer life. When you picture the life you want, remember this: lots of people already started moving toward it. We're not worse, we just need the right method. Let's enter markets steadily and quietly carry out the gains that belong to us. I'm Harvey, the trader who tells you to wash the cup first, guard your capital first, then reach for reasonable returns. See you in the course. Disclaimer: this course is for education, not personal investment advice. All trading carries risk, and past performance does not guarantee future results.